Hello again, everyone. It's Vince Four from TradingWinds.com, and this is our update for September 18th, 2022. Hope everyone is enjoying their weekend so far. Let's take a quick look at how things finished off on Friday. We had another down day on Friday for stocks. Now, they did pair their losses as we headed into the close. It was triple witching day, so there was quite a bit of volatility, but we were down about twice as much as we finished lower here. So the Dow finishing down 148 points. Now, you can see we're well below the 20 on the daily here. We are below the 20 on the weekly, and we are below the 20 on the monthly. And it really looks like we're about to trip some lows where then, again, we head into an area where there's a lot less support. So now, before I get to all these charts, I just want to say that when you look at these, when it comes to the index charts, the Dow, the S&P, the NASDAQ, the Russell, we are below the 20 on all three time frames, the daily, the weekly, and the monthly, on all four of these charts. When we break down the different sectors and we look at the main ETFs of the different sectors, we normally look at 12, and recently 10 out of those 12s have been bearish. We've had energy and utilities that were still above the 20, still looking, more bullish than bearish. Well, that's changed, and now we have 12 out of the 12, all below the 20 period MA, all looking bearish. So we are in a downtrend here. There's no question about it. If we look at the S&P 500, we gave up another 30 points on Friday. Again, we paired those losses by the close. And you can see we finished well off the close here, but still, compared to the previous day, we finished lower. And we did put in a fresh new low here. So, let's get this out of the way. So, again, we have a series of lower highs. We continue to have lower lows. We should be heading back for a retest down here near 3,600. If we look at the NASDAQ 100, down another 74 points on Friday, again, well off the lows, but once again, we put in a new low here, lower highs, lower lows. We are bound to come back here to 11,000 or so. And the Russell giving up another 28 points, not quite tripping this prior low, but, pretty much got there earlier in the day. So we're still looking for a move down to the lows here near 1640 or so. If we look at crude oil, down another 34 cents on Friday. This is clearly in a downtrend as well. So we'll continue to keep an eye on that. Gold, which has been trending lower, did finish the day higher by just 6 points. So not a big deal, but we tripped that low from the prior day. Silver, looking like it's retesting that 20 here. So far holding on pretty well. It is above the 20, but, still, if you look at the major pivots, there's no question that we have lower highs, lower lows here. And the dollar index, although we did finish slightly lower on Friday, we continue to hold on to this uptrend, this pretty strong uptrend. The dollar still looks pretty bullish. Let's broaden the scope here and look at the main ETFs of the different sectors, starting with energy. And there you go. For the first time in a while, it is back below the 20, giving up a little over 2% on Friday. Not a good day for the energy sector. You look at financials, and they have been trending lower. We're slowly making our way back to the low here, this recent low of 32. It was down 30 cents on Friday. XLK, well within that down move, getting very close to this low here near 122. We're still at 128. Again, we finished off the lows on Friday, but still gave up another 0.5 percentage point. XLP, which actually managed to finish with a gain of 17 cents on Friday, but you can see this is a bearish looking chart. We're well below the 20 here, making our way down to about 68, this low from last June. XLU, which was the other one that was holding up well, gave up that 20 early in the week, never looked back, finished near the low of the day on Friday, in real jeopardy of taking out this low here, the low from September 1st. Should that give way, there's a nice gap here. which would take us to about 70 or 71. And not sure that level would hold anyway. But we're still at 74.5. Let's look for a move down to 71 at a minimum here. Healthcare also trending lower. I mean, they are all trending lower. So I can keep repeating it, but that is the pattern. Consumer discretionaries, same thing. Real estate here, exact same thing. Some are further along than others, but again, overall, some pretty bearish activity. Now, are we due for some sort of a bounce? Sure, but in this kind of environment, who knows really? We just have to keep an eye on the price action very closely to look for any sort of clue of a potential bounce. Right now, it's still losing steam here. We should be able to get down to about 38, that June low here on the real estate ETF. When we look at XLI industrials, we gapped on Friday. And, again, making our way down to this low here. Materials also gapping and getting very, very close to the July low here near 69. Communications continues to drop. This has been the most bearish one all year. And look, we are almost there now. This was the absolute low in March of 2020, when we went into lockdown and then started to recover. And this is the area where we crossed back above the 20, starting to gain momentum here to the upside. Well, we're pretty much back to that first move above the 20 here. But look at how we finished the week. Bearish engulfing pattern, a very, very bearish candle closing near the low of the day. We are likely to come back to about the 38 level here to retest the March 2020 low. And the retail sector also on its way there. Let me go back to the daily chart and show you that we are below the 20 and making our way back to the June lows here. So overall, a very bearish look at this market. Nothing really bullish about it. If we look at the economic news out this week, not much on Monday. Tuesday, we get building permits, housing starts, and the Red Book report. Wednesday is the big day. Wednesday, not only are there a slew of announcements here, but we get the Fed's decision on interest rates. So we will get the mortgage apps number, existing home sales, crude oil inventories, gasoline production, and inventories. And then, of course, the Fed's meeting their FOMC statement and their decision on interest rates. We fully expect at least 0.75 of a percentage point hike. Could be a full percent, could be more, who knows, could even be less. But at this point, everything they've hinted at and the most recent CPI report dictates that we should see at least a 75 basis point hike on Wednesday. Thursday, jobless claims, and that's about it, not much else. Friday, manufacturing PMI, and Fed Chair Powell is going to speak. Not sure he can add very much to what we get on Wednesday, but either way, that's going to be a big announcement midweek. But again, we're starting the week on a pretty bearish note here. Keep an eye on those equity futures that open up at 6 p.m. Eastern time this evening. Now, tomorrow, being Monday, September 19th, we are having another live market chat, but please note the time change. Normally, we go live at 1 p.m. Eastern. We are going live for the second week in a row at 10 a.m. Eastern. Again, I apologize. I have a funeral to attend in the afternoon. And so please excuse the inconvenience, but we should be able to get back to our regular schedule next week. So I hope to see you at tomorrow morning's live market chat. Again, we kick off at 10 a.m. Eastern. But until then, enjoy the rest of your weekend, and we will see you on our next update.